Warren Buffett, known as the Oracle of Omaha, is one of the most successful investors of all time, with a net worth of over $104 billion as of March 2023. But did you know that he made his first $1 million when he was just 30 years old? Hello and welcome back to our channel. We are back with another interesting topic that's going to blow your mind. Today we're going to talk about how Warren Buffett, the world's most successful investor, got his first million. If you're not familiar with Warren Buffett, he's the CEO and chairman of Berkshire Hathaway, a multinational conglomerate holding company that owns a variety of businesses. But what's even more fascinating is that he started out as an ordinary kid, just like you and me. And through hard work, determination, and a knack for investing, he became one of the richest people in the world. In this video, we'll dive deep into the timeline of his early life, the investments he made, and the tips he has shared that helped him reach his first million. So whether you're looking to start investing or just curious about how the rich get richer, stay tuned because you're in for a treat. Welcome back to our channel. In this video, we'll take a look at how Warren Buffett got started and how he made his first $1 million. Warren Buffett was born in 1930 in the city of Omaha, Nebraska. Even as a young child, he expressed an early interest in business and investing. He was always on the lookout for new opportunities to increase his income. In his youth, he ran several businesses, including one in which he sold chewing gum, another in which he collected glass Coca-Cola bottles and exchanged them for money, and a third in which he sold weekly magazines door to door. Additionally, he held a part-time job in a grocery store that had been owned by his grandfather. After forming one of his business partnerships with a friend, he invested $25 in purchasing a used pinball machine, which he and his partner later installed in a local barbershop. Because they were pleased with the amount of money coming in from the pinball business, he decided to purchase several additional pinball machines and install them in 3 additional barbershops. His pinball machine business was eventually sold for $1,200 and took less than a year to complete the transaction. When Warren Buffett was 11 years old, he made his first investment by purchasing 6 shares of City Service preferred stock. This was the beginning of his long career as an investor. 3 shares for himself and 3 shares for his sister. At the age of 14, he made his first investments in real estate by putting a savings of $1,200 into a farm that was 40 acres in size. Buffett was rejected by the Harvard Business School and attended the University of Nebraska, where he studied business and economics. He then decided to take a course from Benjamin Graham, the author of The Intelligent Investor, which is widely considered to be one of the most popular books on investing and who is known as the father of value investing. Benjamin Graham would go on to become Warren Buffett's mentor in the long run. Warren Buffett's journey into the financial world is an intriguing one. Despite his desire to work on Wall Street, both his father and mentor Ben Graham discouraged him. This setback, however, did not deter Buffett from pursuing his passion. He even offered to work for free for Graham, but Graham declined. Buffett returned to Omaha and worked as a stockbroker while studying public speaking with Dale Carnegie, which helped him become a more engaging and effective communicator. In the year 1951, Buffett learns that Graham is serving on the board of directors of the insurance company Geico. He rides the train to Washington, District of Columbia on a Saturday morning and waits outside the organization's headquarters until the janitor opens the door for him. After inquiring as to why anyone else is working that day, he locates Lorimer Davidson, an executive who works for Geico. Buffett quizzes him on various aspects of the business as well as insurance in general during their 4-hour conversation. Following the conclusion of their conversation, Buffett is left feeling extremely enthusiastic about Geico. As a result, he decides to invest 65% of his savings of $20,000 in Geico stock the following Monday, which leads to the creation of an enormous fortune. Buffett is now the sole owner of Geico. After receiving guidance from Benjamin Graham, Warren Buffett established Buffett Partnership Limited in 1956 when he was only 26 years old. This was Buffett's first investment firm as a professional. In 1961, when Buffett's partnership was already worth millions of dollars, he made his first investment of $1 million in a company that manufactured windmills. By the beginning of 1962, the Buffett partnership was already worth more than $7 million, and Buffett's individual share was worth more than $1 million at that point. After years of profitable business, Warren Buffett wound down his partnership in 1969, claiming that he had run out of profitable investment ideas. In 1962, when Warren Buffett was just 30 years old, he was already a millionaire before he teamed up with Charlie Munger as his partner. He retired in the early stages of his 30s. He became a millionaire in his late 20s and retired in his early 30s. Their partnership eventually led to the development of an investment philosophy that was predicted on Buffett's concept of looking at value investing as something other than an attempt to squeeze a few extra dollars out of failing businesses. This concept was the cornerstone of Buffett's investment approach. In 1962, Buffett became the largest shareholder in Berkshire Hathaway, which at the time was a textile mill that was struggling and on its way out of business. Buffett saw the potential in the assets of the company and began to shift the focus of the business away from textiles and towards investing, despite the fact that the textile business was struggling. What began as a traditional Graham value play evolved into a longer-term investment when the company showed some signs of life. Over time, Berkshire Hathaway evolved into a holding company for a diverse portfolio of businesses and investments. The profits from the textile company were put towards financing the purchase of other investments. The original company was eventually overshadowed by the holdings of other businesses. Buffett sold his textile company in 1985, but retained the rights to use the Buffett name going forward. The journey that Warren Buffett took to earn his first $1 million appears to be quite incredible, but there are other people who have assisted him in achieving these goals as well. These are the people who had a significant influence on Buffett's investment philosophy and helped shape his approach to finding undervalued companies and investing for the long term. First is Benjamin Graham. Buffett was one of Graham's students. Graham popularized the concept of value investing, which centers on the concept of purchasing stocks at prices that are lower than their current market value. This strategy had a significant impact on Buffett's investment philosophy, which ultimately led him to look for undervalued companies to invest in. The second is Charlie Munger, a successful entrepreneur and investor who has been Buffett's business partner for over 4 decades. It is credited to Munger that he assisted Buffett in expanding his investment strategy beyond just value investing and into investments that were more diverse, such as those in technology and healthcare industries. Additionally, Munger had been an important figure in the management of Berkshire Hathaway and has been instrumental in directing the long-term strategy of the company. Third is David Dodd. David Dodd worked alongside Benjamin Graham and is credited with co-authoring the investment classic Security Analysis with Graham. Benjamin Graham was David Dodd's colleague. Buffett was a huge fan of the book, and he referred to it frequently as he developed his own method of investment. Buffett's approach to investing was significantly influenced by the way that Dodd prioritized conducting in-depth research on companies and locating securities that were trading at a discount. Next is Tom Knapp, which was one of the limited partners in Warren Buffett's partnership in the 1950s. Tom Knapp also served as a mentor to Warren Buffett during this time. Buffett credits Knapp with instilling in him the values of patience and steadfast adherence to one's own investing principles, even in the face of temporary failures. Buffett's famous quote, which reads, "Our favorite holding period is forever," shows the influence that Knapp had on Buffett. Lastly, Walter Schloss. Walter Schloss was a friend and mentor to Warren Buffett. Walter Schloss was an investor. Buffett's investment philosophy was significantly influenced by Schloss's emphasis on purchasing stocks at a discount to their intrinsic value. Buffett also credits Schloss with teaching him the significance of remaining patient and disciplined while investing. Everyone wants to be a millionaire. Although the journey may seem challenging, it isn't impossible. As we walk through that path, Warren Buffett can be the perfect role model we can have. Reaching $1 million in the Warren Buffett way involves a combination of patience, discipline, and a long-term investment approach. Here are some tips to keep in mind if you want to reach your first million like Warren Buffett. First, invest in what you know. Warren Buffett has made a name for himself by investing in companies that he is familiar with and that have a sustainable advantage over their competitors. He once said, "I don't invest in things I don't understand." Increasing your chances of being successful by investing in businesses that you comprehend and that you have a distinct advantage over their competitors is one way to do so. Suppose you are knowledgeable about the technology sector and consider yourself to be a tech enthusiast. You could put your money into companies like Apple or Microsoft, which both have powerful brands and are dominant players in the markets in which they operate. Second, buy stocks at lower price. Warren Buffett is famous for the value investing strategy he developed, which entails purchasing stocks that are currently selling at a lower price than their intrinsic value. This necessitates the search for businesses that the market incorrectly values but which have positive prospects in the long run. Consider the following scenario. You come across a company that has a healthy balance sheet, solid earnings growth, and is trading at a price that has a price-to-earnings ratio that is lower than the average for its industry. This could be a sign that the company is undervalued, which indicates that there is an opportunity for a good investment. Third, keep for the long haul. Warren Buffett is known as a patient investor who keeps his stock holdings for many years, if not decades at a time. He believes that the best strategy for investing is to avoid trying to time the market and instead focus on purchasing shares of strong companies and holding on to them for the long term. Consider the following scenario. You decide to invest in a company because you believe it possesses a significant advantage over its competitors. Instead of selling the stock after a few months or years, you keep it for the long term, allowing the company to continue to grow and allowing the value of your investment to rise. Last and most important, be patient and disciplined. When it comes to the stock market, Warren Buffett is well known for his patience and discipline. He does not let himself be swayed by the short-term fluctuations in the market and remains true to his investing principles. Consider the following scenario. You have invested in a company that has recently suffered a short-term setback, such as a decrease in earnings or a decrease in the price of its stock. You choose to exercise patience and self-control, refrain from panicking and selling the stock, and instead keep it in the expectation that it will increase in value over the course of the long term. Although Buffett faced initial resistance, he persevered and found ways to develop his skills and knowledge in the field of finance. This is an excellent example of how determination and hard work can pay off, even in the face of obstacles. As Buffett himself has said, the difference between successful people and really successful people is that really successful people say no to almost everything. By staying focused on his goals and pursuing them relentlessly, Buffett was able to become one of the most successful investors in history. Warren Buffett's journey to becoming a billionaire started with his first million, which he achieved through hard work, determination, and smart investment strategies. Despite facing challenges and setbacks along the way, Buffett persisted and continued to learn and grow as an investor. His success serves as an inspiration to anyone who is striving to achieve financial freedom and build wealth. By following his principles of investing in companies he believes in, valuing quality over price, and constantly learning and adapting, we too can achieve our financial goals and create a better future for ourselves and our loved ones. So what are you waiting for? Let's start investing like Warren Buffett and make our way to the top. We hope you like this video and see you on the next one. Cheers!